Hello and happy Monday. My name is Maggie and I'm here with Purse Strings. Today on our Money Monday, we are going to be talking about, things to look at before you should buy a home. Can you really afford the house? But before we jump into all that, Purse Strings is here every week to provide financial education. And when you need a professional to put things in transition or transaction, we have top tier financial professionals who are willing, ready, and able to serve you. We call those our Purse Strings approved professionals. And Matt Vogel today with us is one of them. So happy to have you on today, Matt.
Happy to be here, Maggie. I'm excited to talk to people about things we do and what's important about financing your house.
It is important stuff. So before we jump into all of it, could you give a little intro of who you are and what you do?
Yeah, my name is Matt Vogel. I'm a residential mortgage professional. So what that means is I facilitate mortgages for people in different parts of the country. I'm here in the West Coast myself. I'm in Bend, Oregon. I've been doing this for 20 years. I love what I do. I love my team, and it's just exciting to be able to help people all the way from first-time home buyers to people who have bought multiple houses to second homes and investments. We love doing all of it, so it's just a pleasure, and I'm great to join Purse Strings and happy to be on with you today.
Awesome. Yeah, we're excited to get this going. If anyone jumping in has any questions during today, just feel free to pop them in the chat and we'll take care of those as well. But before buying a house, there's a lot of myths that we believe. A classic one is that you need 20% down. True?
Yeah,
False?
Yeah, no, that is false. Thank goodness, because sometimes it takes a lot of time to save that 20%. And in the midst, the market can be going up, and that could be a costly decision to have to wait for that amount of time. So, yeah, so depending on your qualifications are. Like, for instance, there's veterans loans out there, which is a 0% down loan, right? And then there's other loans throughout the country that are specific to these loans, the situation of the loan, but there's something called USDA, which is a 0% down loan. There's also a 3% down loan, 3.5% down loan. So, yeah, don't let your down payment stop you from looking into your mortgage and being in a position where you could buy a house. So, absolutely, I'm glad we discussed that. 20% negative.
3.5 is very different than 20%. That's a big difference. What are some other myths that you feel that you hear a lot out there that you want to make sure we say,
Yeah, I mean, thanks for asking. So your down payment. So a lot of times people think that potentially, I've heard this in the past, where your down payment covers all your closing costs. So that's separate. So if you were to put, for example, you had a $100,000 loan and you're putting 3% down, well, that's a $3,000 down payment. And then there's something called closing costs, which are your title, your escrow fees. There's something called origination from the banking institution, appraisal, all these fun little fees that are added in. So all those costs have to be covered on a purchase when you're closing. So it's not just a down payment, but it is these closing costs that we have to, think about and budget for when we're doing a home transaction. So, yeah. Another one that we take a look and hear a lot about is you have to, so I have to have perfect credit. I can't get a house. My credit's, life has happened. Yeah. And there's no way today I'm going to be able to buy a house. Well, Mr. and Mrs. Borrower, there are a lot of times where we can do that. And so you don't have to have perfect credit. Look, we know life happens. Bankruptcies, foreclosures, there's certain timeframes depending on the product that you use that you have to go through. You got 4 to 7 years usually before you can, but that doesn't mean never. And if you have some blemishes on your credit where you've missed a payment, it's really good for us just to have a conversation. So just to talk about, okay, what does this look like? Let's just get in front of it. And if it's a no, or if there is a situation where that can't happen, let's find out how we can. So let's set up a no is never forever, right? It's only in the time frame that's allowed by the guidelines. So, and guidelines are the rules for loans. And I know this is getting way too deep, but basically, if you have bad credit, let's talk about it. There are different products out there that can help you. So, yeah.
Those are all great pieces of advice because if you don't have the money to cover those starting fees, all those fees that add up by the end of the day, that's very important that you have that money as well as the down payment for the house.
Yeah. And I wanted to bring something else up too. A lot of times when you're first starting out, you can also get what's called a gift. And so a lot of times you can get a gift from a relative. And there's other resources that you can get that from as well to help you get the down payment. So you don't necessarily even have to have the full 3.5%. And it varies from product to product, but that is something to think about. So a relative or a parent, if they have the means and they want to, they can gift you the money to help you with the closing costs and with the down payment. So that's important and fun too. And what parent doesn't want to help their kid?
Yeah, that's true. That's true. So it sounds like to get started is we just really need to have a conversation
Right.
from credit with your family, seeing, where money's coming from. And it really starts with just a conversation.
Yeah, it really does.
And I know when people have a conversation with you, your process is a little different than this straightforward mortgage transaction. Could you tell us how you do it a little differently?
Yeah. So I think there's nothing more important in your financial life. I mean, there are things I think maybe equally, but this is a big transaction. It's probably the single biggest transaction that anybody incurs during their lifetime. So we want to take a holistic approach. And what that means is that when I'm looking at your mortgage application or your situation, the first thing I want to talk about is your goals. What are your goals? Have you thought about a payment, or have you thought about your down payment, or where you're going to get that from, or what do you want your wealth strategy to be in a couple of years? And I don't give financial advice, but I just want to hear where they're at, where their mindset is, and what's important to them. So once I hear and I listen to, do you have a small family? Are you single? All those things matter, because each stage of our life, our season of life, each different, if we're single or married, I mean, there's just different things sometimes that happen during all that we would just want to hear about, like with your planning, and then we can structure your mortgage to fit all that. So I holistically look at that. I mean, there'll be many times where somebody maybe has a debt load, but they have a down payment of, let's just say 20%, and they have a debt load of several $1,000s, and they're paying $500 or $600 a month on their car loan or some other debt. Well, we can pay that off and put less money down, but their whole cash flow situation to their household is much less than they're paying currently with that $500 debt. And then maybe it frees up cash for them to put money into a 529 for a kid, or maybe they want to add more money to their retirement or something like that. So we'll listen to all that. So it's all about structuring your mortgage so it fits your financial plan, and also makes you create more cash flow in your situation, or it just meets all the goals that you're looking for. So you can do a lot with a mortgage. You can really implement it into fitting that structure, and we take a good long look at that. So a lot of listening, a lot of restructuring, and maybe even showing them different options that they may never even thought of, to help them potentially even build wealth or put monies in different places that help them down the road in different situations. So, and what I mean by that is like putting money from your house payment maybe into not your house payment, your car payment, if you have a big car payment, and we pay that off, and then you have that excess of cash flow. Well, maybe that money all of a sudden is going into your IRA or your 401k and building wealth that way. So, yeah.
It very much shows why you need an expert to kind of help you navigate some of these things, because there are so many different routes you can take. And so you've probably seen, 1,000 different routes, and each person is so unique. So you really want to talk that over to get someone's, best advice really there to make the best decisions for you.
And I think that's really important what you just said, because, and with that comes experience. I've been doing this for 20 years, and I don't say that for any other reasons, is that we've had a lot of at-bats in those 20 years. I've had a lot of different chances to look at thousands of different situations. And it's just helped me, like, when things pop up, it's not necessarily a surprise at this point in my career. It's just, oh yeah, we've seen this before, or we can do this, or how do we adjust to try and make the best, situation for you, the client. So that's what's really important.
So since you take that holistic approach, I know there's kind of like 4 major buckets you kind of like to look at before, you do all the work. So what's the first one that you like to take a look at?
Yeah, thanks for mentioning that. Yeah, so when we are starting the process with a mortgage, I just like to have a big conversation with the client and just talk them through, these are the things. Have you looked at these things, and where are we with them? And so the first one I always like to talk about is a budget. Do you have a budget? because the last thing we want to do is get into a place where we're really excited, we're going to buy a house, and all of a sudden, oops, we don't have any money left over for anything else in life, right? We're putting all our money towards our house payment or something like that. So what I think is really important is that we just take a step back, present a budget, and have them do a little bit of homework and say, look, here's all your liabilities, you know, what you're paying per month, here's how much income you're getting, and let's just see how much is left over. And that's just really important, because when we're looking at a house payment, that may be more expensive than their current rental payment a little bit, or maybe not, just depends. But we just want to make sure that the goals that we talked about earlier, that you and I were just talking about, we can still meet all of those. So a budget is really the first thing I look at, and it's very important. And we talk that through, and we go over line by line. If they've never done a budget before, I will supply them like paperwork to do a budget. And then after they go through that exercise, it clarifies not only what we can do to help, but for them, it clarifies where they can maybe cut in places, or maybe we don't spend $500 a month at Starbucks. Who knows? You know, it's like we just have different areas that we can look at and say, okay, I'm willing to maybe change this to get something else. So budget is really important. That's the first thing. Yes.
It seems like a great first step, because you don't want to lose all your money into the house and then struggle every month because you have this huge house that you can't afford.
Right. This is
that doesn't sound very enjoyable after you buy a big purchase.
we want to set you up for success, and want to help you with that by giving you an education through the steps of, you know, what does that look like, and what does that look like for me? So yeah.
So after we go through the budget, what's the second thing you like to look at?
So I want to talk to them, bringing it back to the holistic approach. I want to talk to them about the four pillars of, you know, of financial strength. So part of those, and one of those is retirement. You know, have you been putting money away for retirement? And that comes along with the budget. I want to make sure that if they haven't, that they're thinking about it, because we want to build, you know, the housing. That's one way to build wealth, retirement, savings, all those different things, or a SEP IRA, you know, not a SEP IRA, but a 529 plan. You know, if they have children they want to put in college, where are they with that? Because, and the reason we go so deep and really get to know people, I mean, we are really asking a lot of questions, and we are really getting to know everyone. But it's important that way, so we can educate and not necessarily guide you. But if you have a financial planner, for example, and they've set up a situation where, here, this is how much money you're going to put in towards your retirement, this is what you're looking for your 529, because they've had those really in-depth conversations. We want to work hand in hand with that financial planner to really bring in the mortgage as part of their overall financial plan. So, and we want to make room from the budget, right? We want to make room for their retirement to continue to add to that, so they can build that part of their spoke, of their hub of financial freedom. We want to make sure that they're building that as well. So not that they have to do retirement, but we want to make sure if that's important to them, that we leave space for that to continue to happen.
I love that. And it's always, always great to bring up that your professionals can talk to each other. Mm-hmm. Introduce them, and they'll kind of talk and do the work on your behalf, but they don't have to be so separated. They would love to talk to each other and kind of make sure that the plan works, really well together, and you're not just going against each other.
No, I think it's hand in hand. And honestly, when people have financial advisors, I want to bring them in. Mm-hmm. Because we want everybody, number one, everybody to be comfortable. And your financial advisors on your side, we're on your side as well. Everybody's working for the one goal of home purchase. And, the more wisdom that we can bring in, and more that we know that we don't know from them, from the financial advisor, and their wise input is always helpful. So I even have a software where I can bring in the financial advisor, and we can have a Zoom meeting, and they're on it, I'm on it, the clients are on it, and we're all talking through the structure of the loan and how this fits into their overall financial plan. So yeah.
Wow. Yeah. That makes you feel much better. I feel like when you're buying the house, much more secure in your plan and the goals there. So what's then the third thing you like to look at after you do the budget and the retirement?
Thank you. Yeah. Savings. We always want people to not be in a position, or just educate them on being in a position. So after you put your down payment, after you do your closing costs, how much money do you have left over? So savings is really, really important, right? Life sometimes throws us a curveball. And so we recommend 3 to 6 months of total expenses in a savings account. And so we really talk about that a lot when we're making the decision for down payment, so that we can potentially have that amount. So if something does come up, nobody has to get, we've already pre-planned for it, right? So we don't have to worry, and we don't have to live month to month because we've pre-planned and talked about their savings. And so if some kind of unforeseen emergency comes up, they're ready. So that's something that we discuss as well.
It sounds very important, especially you don't want someone to spend all their money on the down payment and then kind of look around and not have anything else left.
Yeah, and not only that, but if they lose their job or something, we want them to have a little bit of a cushion. So we're just making, good practical decisions and helping them through things. When you're buying a house, there's a lot, you don't know what you don't know.
Yeah.
And that's really what we're here for. I'm here to help you with those questions that you may not even have thought of. And so you're extremely confident when you go out and buy a house, because we've gone through everything we can think of to make you confident and give you the education for this big decision that you're making. So.
Yeah. And so then there's one more thing you look at. What's that?
Credit. Yeah. So credit is a big thing as well. We're not credit professionals, but we look through their credit and we just talk about credit and what's important in credit too. So, it's important that you pay your bills on time. It just is. It helps your credit score. When you have a lower credit score, it's going to affect your interest rate, which could cost you thousands of dollars, from a person who has the best credit score to a person who has maybe a credit score where things haven't been exactly perfect. We can still do the loan, but it's always best, if you want the best interest rate that you can get, it's the higher credit score. So credit scores are important. Building your credit is important. Paying your bills on time for that to happen is important. And then credit usage. How much credit can we have on our credit cards? That sort of thing. I don't know all those numbers. It feels like the credit bureaus are changing those all the time.
Yeah.
But we want to probably keep below 30% is the number I've always heard. And just have 3 lines of credit. 3 lines of credit is really important too when you're doing a mortgage. And it doesn't necessarily have to be that way, that you have a full 3. We can build credit in different manners for different products. But in essence, credit's important. And if you had a blemish or a life event, we can show you how to get out of it. And just by time and different strategies. And but credit is a very important component when lenders are looking at people's portfolios and their applications and so on and so forth. So not portfolios, that was the wrong word.
Well, the other 3 items you mentioned, they're very straightforward once you kind of look at the numbers. The money's there or it's not. You see the budget and it's not, whatever it is. But for credit, let's say it's a couple buying a house. There are 2 credit scores. What if one's really good and one's, not as great? How does that kind of work together? How do you, assess this together?
Yeah, there's 2 options there, and it depends on the product itself. But some products will utilize the primary breadwinner's credit is the credit score. But traditionally, it's there's 6 scores with 2 people, and so they take the middle score is what they utilize for the credit, and then they use the lower of the 2, honestly, and that's what the starting basis for the interest rate and so on and so forth, and how we underwrite. So interesting.
Yeah. And then one more question about credit that I know the answer, but before you buy a house, once you start, doing the paperwork and stuff, I always hear then it's like, don't throw big things on your credit card. Can you kind of dive into that?
Yeah, that's actually really, really great. And thank you, because that is something I was going to mention and I forgot to. So that's really important when you're in the middle of it. Thanks, Maggie. We're in the middle of doing a home loan. You don't want to go buy a boat or a car or like start buying furniture necessarily on your credit. You don't want to, that kind of will just add extra paperwork, and that's fine. But sometimes that'll throw our whole, what's called debt to income ratio, out of balance. And so we don't want that to happen. So we want to have a long conversation about the do's and don'ts of once you do apply. And a lot of the don'ts are, don't apply for additional credit, don't go buy anything, don't do any of that stuff. Do continue to pay your payments on time, continue to save as much money as you can, and then also talk through the strategy we talked through in the beginning about the holistic strategy. I'll give them pointers, and I'll give different people pointers on what we need to do and be reminded of. and how the process works. And that's interesting too. As we go through the process, we're always giving updates. People aren't ever wondering what's going on. That's really important. I think communication is really important, and we're communicating with all parties. So it's just important that we facilitate a place of comfort and also a place of safety for people to be able to answer questions, ask questions, any question, because like whatever your job is that you do every day, you're an expert, right? We would come to you and ask you those questions and all that stuff, but when you're looking for a mortgage, we've done a lot of times and people just don't know necessarily. And we just want to be that advocate for them. So can help them.
Awesome. Yeah. The one about, putting things on your credit card always clicked with me, because I could always see myself like buying a new couch or a new table for the new home that I just bought. And then it just, it seems contradictory, but also makes a lot of sense.
It's not that you necessarily can't do that, but we just have to make sure the numbers still work if you do that. Right. And then there'll be some extra paperwork that needs to be completed too. So it's just something we try to stay away from, but
yeah. Well, you just think new house, I'm going to buy all these things for the house.
I know.
But just wait till you get into the house,
Yeah.
Patience, it's a virtue.
Yeah.
So we've gone over a lot of great things. I know you said you look at the budget, you look at people, how they're funding their retirement, their savings, and their credit to really get that holistic view before, we do the whole mortgage, which all seems super important.
Yeah, that's the foundation. Absolutely. Go ahead.
And so, what does the process look like if someone were to call you up and wanting to do this? What is the first step?
That's kind of everything we just talked about, really. Awesome. I just get to know them. Yeah, we go through the holistic. I ask a lot of questions, see where they want to be, and see where they're at right now. And then basically we have a link that we would send for an application. They would fill it out. We get the documentation. And then I would put a presentation together with different, what their budget is. So if they have a budget of a certain a number, I would put that payment in as far as this presentation. I would show up, and then I would maybe show them, hey, if you want to find your dream house, can you afford it? A dream house meaning something even a little bit over budget. We would take a look at that. And then, so we would take a look at a couple different scenarios. And so that when they're going out and looking for houses, that they can feel, oh yeah, we talked to Matt and he said, this is, what my payment would be on this price point. Remember that we talked about that. And then they can think about that too. So they're not shocked, or there's no, questions that they have. And then specifically to a house, because things change on each house as far as property taxes, they can always call me and we'll go over those specifically and put presentations together for those as well. But yeah, that's kind of the process. The process is really, it's personal, and I think that's what the best part about it is that it is personal. So
yeah, it is nice. Well, this has been a ton of great information. Is there anything else you want to make sure is shared before we sign off today?
I can't think so. For the beginning part of mortgages, just know that it doesn't have to be scary. Wealth is a great wealth building strategy over a long period of time. And I would say it's more about time in an investment than timing. So this is an investment advice, but it's more about, it's hard to time a market exactly. But if you have a long-term strategy, you have a greater chance of success like that. So that's what I would say.
It's a great piece of advice. Well, if anyone has any questions or would like to work with Matt, you could always reach out to him. His email is going across the bottom here at mvogel@loandepot.com. He's also one of our Purse Strings approved professionals, so you can check him out on our site, pursestrings.co. And we will be back here again next Monday with another Money Monday. All right. Well, thank you. And until next week, see you then. Bye.
Bye-bye.